Good morning. Welcome to the new year. And guess what? Speaking of the new year, we all have New Year's resolutions. Today on the workshop, we're going to run through our trading resolutions for the new year. Let's check it out after the bell. Well, that's not a New Year's resolution, is it? But this is. Look at that little bad boy. Woo. This is not a cowboy.
Here's my first New Year's resolution.
Don't worry.
Every time the Yellowstone music comes on, I'm going to roll my eyes. That's my New Year's resolution. Here we go.
You did that last year. Happy New Year, boys. Welcome to the new 2026. Are we ready?
I'm as ready as I'll ever be.
Yeah, okay. You guys don't seem
just like the odometer going up, you know. We hit 70,000. We hit 80,000. Who cares?
Before we get into it, what do you think about 2026 at large? Do you think big positive up year? Is there going to be choppiness along the way, big downturn, and then a rally at the end? That's what I kind of think. I think we're going to get hammered mid-year and then end up at the end of the year pretty well. That's just my thought. Any
reason for that, Lex?
Yes, but I can't talk about it right now because it'll take too long. But we'll get into that at another time. So anyway, what do you guys have any feelings?
Go ahead, Mark.
I was going to say that fairly well described 2025, and recent history is probably the best predictor of future. So I'll go with that.
Oh, okay. I like it. I didn't even pay attention to 2025. You asked me what did it do in 2025. I know it was up. I didn't know what it did in the middle, though. I can't remember.
So. It was a good time to close your eyes.
Yeah, I know. All right, cool. So today, the New Year's resolution show. I think for people who've been in the game for a long time, they're probably pretty disciplined if they're still doing it. So they probably don't make New Year's resolutions. They just stick to what they always do, which is the same thing, probably year in, year out in terms of discipline.
Not a New Year's resolution.
So then, therefore, it's therefore not a New Year's resolution. So, having said that, let's have a New Year's resolution. What do you think? Who wants to start with this little mess? Mark, you want to start? I think you got a longer list than Jason and I.
Yeah, sure. I think my number one resolution is to focus on basic edges. That I think options provide a lot of like really interesting complexity, a lot of stuff to dig into. They can be really complex, but I think the best edges that a retail trader can go for are simple, repeatable, and based on very solid fundamentals. That I think you'll quickly get in over your skis if you're going beyond that. So keep it simple, stupid.
Yeah, I like that a lot. And I've been on this. I wouldn't call it a crusade necessarily, but on this little bit of a rant relative to retail trading and making it simple. I just look at my own process, and when I do well, I have a thesis, right? We always talk about this, and my thesis could be wrong. It could be right. When it's wrong, you have to have the emotionless decision exit tree where you get out of it and move on to the next adventure, right? It doesn't really boil down a lot of complication about deltas and Greeks and Rho and Vega. It rolls to me. I sold it at 2. I want to buy it back at 1. That's my target. I'm gonna get out at 275 on the bad side, And I don't even look at the deltas or theta ever. I mean, I really don't. I think the trickier thing for retail trading is figuring out what your edge generator is. And there's millions of them out there. I think they're infinite. But once you figure that out, and you're pretty good at it. The discipline part needs to follow, right? So thoughts, comments, queries.
I think a lot of the edge is in. I think a lot of the edge in the retail world is more about trade planning and discipline.
Yeah,
I talk a little bit. I say that trading, like markets, is like the gym for virtue. You have to be patient, you have to be humble, and you have to be disciplined. And you have to kind of build those up in order to be successful at trading. It's very hard to, you were saying that you have to cut your losses when you know you're wrong. How do you know you're wrong? And then a lot of times that ego kind of creeps in there. So that's difficult to do. It's easy to say, difficult to do.
Right.
But yeah.
Okay. What else, Mark? You said you had like 3 of these things. Did you clip them all? You clipped one, I think, right?
Yeah, I would say focus on the basic things. I think your source of edge should be as simple as possible. And like that kind of goes along with the second one I have about like trimming the number of mistakes that you make. And not just like getting out of a bad position when that happens, because like you say, risk management certainly is something that you need to focus on. But you don't need to walk up to the tee every single time and like hit a home run. I guess
Right.
I made some metaphors there, but
You mean like a 300-yard drive when you walk up?
Yeah, that's sorry, a 300-yard drive.
He's batting at the golf range.
Yeah, I'm batting at the driving range. No, but it's like you don't have to swing at every pitch, and like there's not always a trade to be made. And I think that's
Right.
like a big mistake that people tend to make is that they
Yeah.
want to do something, they want action. And like even as a market maker, you used to see this, right, Lex? Like during the summer, you'd be trying to sit on your hands as much as possible and not make those forced trades, not carp your edge, just because you needed to, feel your pulse that day.
Right.
But like, I think eliminating bad trades before they even happen is an important part of it.
Yeah, I think that's a great point. And I am unfortunately guilty of the excessive trading disease. It's not because I feel the need to be in and having to make the money part of it. It's just it's like I'm in like a junkie, right? And it's a bad quality to have in the retail world. It's probably bad in the market maker world too, because quite frankly, the market maker world was a little easier because we were reactionary, meaning markets came to us, we said buy them or sell them. We didn't go out. I hardly ever bought an offer or sold a bid in the market making world, right? Unless I had just the world's worst risk on, and my risk manager said, "Hey, dude, you got to do something." I had to go start shucking hay. We just sat there and waited for it to come to us. Well, retail people have the whole world at their fingertips relative to trading options. They look and they type in Tesla on the keyboard, and there it is. Knock yourself out. If you're a junkie, you're gonna, you better find a discipline tool. You're gonna go nuts.
Even as market makers, like I think the temptation is there that like on slow summer days, you'd be more inclined to like reach for a trade, trade something for a nickel an edge when you really should have been trading it for 7 or 8 cents an edge, and you do boredom trades. Like I think that that risk exists if you're a human.
Yeah, no, I get it. So you really got to have that discipline and take that part of it out. I agree with that. That's a great New Year's resolution for trading. Have a solid edge profile or thesis. I call it thesis a lot, whatever that is. And then once you have it, set your price, get in. Now, what about, how do I say this? What about, let's say you just throw something out there at $1.50. You're trying to buy something for $1.50. It's a spread. It's an option. Who cares? Right. And it's dancing around. That's your midpoints dancing. Now it's 157, 153. It bounces around 150, goes up to 160, yada, yada. Do you chase it? Do you raise that price to 160, or do you just say, my price is 150. If I don't get filled, I'll live to trade another day. I'm moving on to the next one. What do you think?
I think it depends on your plan. Like if you were trying to get in at 150 because you were trying to get a better price and it just never hit you, then, and your thesis is just as good at 160 as it is at 150,
fair.
I'm okay chasing. But if you are getting there because you have some kind of quantitative thesis and 150 is the number that gives you that positive edge, then you don't chase it. Okay. So I think it depends on your trade plan.
Yep. Okay, makes sense.
I will go so far as to say there is no retail trader that has any clue the difference of whether it's worth 150 or 160. So if you think that you're like playing games and being cute doing that, like you're wrong.
Well, there's a lot of TA that does stuff like that. Like, it has to hit this trend line and then, go up or whatever. And if it never hits the trend line, and I don't, that's not really my style of trading, but I know a lot of people that's what they do. So.
I think they're all good points. I think relative to retail trading, I think, if the reason to get in is because I want to be long because XYZ stock is going to be 10% higher, making this up, right? Well, 10% in the stock, I'm assuming it's not a $1 stock, but let's say it's got reasonable price to it. Your 150 versus 160 is probably irrelevant. You're right. Let's get in and take advantage of the thesis, and then we'll start treading and swimming and paddling as needed once we're in. right?
As a caveat, I say that because it's a $1.50 option. If we're talking a nickel option paying, 2 cents versus 10 cents, that I think is a big difference.
Yeah.
That
Makes
you're going to start seeing like real differences. But, if you're shading nickels on multi-dollar options, like
yeah, fair enough. So
maybe
maybe
it has to be bigger than that.
maybe it's a percent of the option price, that you can kind of, factor in and wean into your decision tree as to how much you're going to kind of grab or reach, right? So I like that. Okay, so we've got a couple. Jason, do you have a quantitative one that or did you already say it?
I actually have two.
Okay,
I know we
ahead,
only talked about one pre-show, but I have one that's second. The first one is I have to adhere better to my leverage ratio. We do a hedge fund, and we have specified leverage ratios that sometimes I drift a little bit over, and I have to be better at staying disciplined in that leverage ratio.
Got it.
Okay. That means risk management. The retail translation is risk management. Please, don't go in over your skis. Don't allocate too much of your portfolio to an over leveraged position.
Got it.
And then my second one is I have to not trade for a week after big wins, because
not trade for a week after big wins, because you think you're the shit, don't you?
Yes. Yeah.
Mm-hmm.
I get that. That like post. You see it in football all the time. Somebody has a big win, and then the next week they lose to the team that's getting the first pick in the draft next year. Like it's, like you see that all the time. People get overconfident, and then you get overconfident, you do something dumb, or
right.
you start thinking you're better than your plan.
No, I get it. Yeah, that's a good one. I like it.
Not trade for a week. Once I'll have milestones.
Yeah.
Of like, oh, I'm up this percent, or I'm up this percent. I'm gonna take a break for a week.
Yeah, no, I like that. That's good. I think again, another challenge relative to what is at your disposal as a retail person sitting in front of a computer. You're, like me. I mean, like I said, I'm an addict with this stuff. I've got to walk away more than sit there. Mm-hmm. And if I have some clever alerts that alert me to when things are at risk or good for that matter, and I'm taking things off or rolling things around, okay, great. But you're right. I will sit in front of that computer and try to make something up, and that is just no good. No bueno there.
Yeah, especially after a bunch of winners. You're like, everything that I do is going to win, right?
Yeah. Cool. All right. I got a couple. Mine for me personally, and I'm hesitating saying this because I don't want to get anyone angry. Is I cannot trade 0 DTE. Okay, just sorry, I can't. I'm not saying the product's bad. There are people who are awesome at it. Every loss I've had, especially this year, was in a 0 DTE position. Every single one. Okay, so my New Year's resolution is not to even look at it. Now I can do 1 DTE and 2 DTE and 3. I'm okay there. I can't do 0. I don't know why I can't do it. Okay. So that's number one. Number two is I need to define my cadence. And what I mean by that is how long out in time is my thesis going to be, and where is maximum velocity of money making set for me. And that is in the 11 to 23 day time zone for me. Okay. Because I like to sell premium generally. And the 0 DT is a problem because you breach strike all the time. And all of a sudden it's not premium. It's just dollars, wafting. Whereas if it goes against you in the 23 day zone, you're going to feel a little bit of pain, but not enough to have to, bail water. Right. And the closer you get to 11 days, it's going to get a little more pronounced in terms of having to make a decision risk management wise, but I don't find that it's super threatening. So I tend to let that time zone for me marinate. It's a good time for marinating the chicken or the pork or the beef because it's not getting too done. It's not too raw, and things can happen in that zone. And Mark, you and I have talked in the past about butterflies. If I put a butterfly on with 200 days to go, I don't have to look at that for 130 days. What's the point? kind of thing. So that's my little deal for me. I love I'll call it a swing trader, maybe a swing trader plus sort of cadence in terms of the time. And that's what I need to stick to. I do the best in that zone. I suck in the beginning or the 0DT, and I don't even, it's not even worth my time in 100+ days. Just me, unless I have an investment strategy of I just want to be long Amazon forever. That's different. Okay, cut me down. Go ahead. Tell me.
No, 0DT. So there's a lot of retail that trades 0DT.
Oh, they love it. I understand why too. Totally understand why.
It's lottery ticket kind of stuff. And no matter what edge you have in 0DTE, there's always something else that could come in and spike it. And because you have such little time to expiration, that one spike can kill you. Think like a Trump tweet or something like that. You could sit there, the greatest edge in the world, and then Trump throws out a tweet that says, "I'm conquering Greenland tomorrow," and then the next thing you know, we're either spiking down or spiking up, or going against your thesis or anything. And if you have something like a 10 to 30 day or 60 day thesis, that spike can recover quickly. And it matters less to you.
Yeah.
So that's kind of why I tell people with 0DTE is if you're going to be successful at it, you have to know every single input that's going into the market. Otherwise, you're going to get spiked out many times.
Yep. Mark, any thoughts on I'm calling it cadence. That's my word for the time frame you're in a trade. What's your honey zone? Any thoughts on that one for you?
Yeah, I mean, like a lot of what I'm hearing is, and this goes for everyone, is like knowing thyself and knowing what kind of trader you are. And like, that's kind of one of the most important things. Like, are you someone that can sit back and watch and sit on your hands on a long-term investment that's going to wiggle and, rise and fall? Or are you the type of person that wants to be dialed in and scalping ticks and whatnot? And those are totally different personality types and opportunity sets. And, knowing which one you as a trader or investor align with, I mean, is going to save you a lot of money in the long run.
Yeah. 100%. And the personality of trader is important. Just as a side note, look for Lex's book down the road because it has to deal with this personality thing. That's coming soon.
Lex's book?
Lex's book. I can actually write, so go figure. Stay tuned for that.
I was about to say, I'm shocked you could read.
I can't read. I can write. I have big scribble. I write with my paw. No, that's great. I want to go back though to one thing about the 0DT part. Having said that, I suck at it. Okay, I'm no good at it. It doesn't mean that everyone sucks at it. So that means that there are people who are really good at scalping. They have order flow analysis, whatever it is they do. I don't know, but there are people who are great at it. And if I could do that, if that fit my personality and I were good at it, guess what? That would be my first choice because where your balance sheet lies at the end of every day, right? No ifs, ands, or buts. There's no theoretical value. There's no nothing. There's a bank account or a trading account, and it is mark to market, and it's actually out of your position. You're done. I love that part of it. If I could be, profitable on it, I just can't. So I've got to sit with a little overnight risk for 11 to 23 days, which I'm okay with because most of my stuff is very, defined risk based. So, but I think people can do it, and I know people who do it very well. So good for them. I just can't. So I'm taking my ball and going home. I swear. No.
Who's going to be mad at you? Is it Dan? Dan's going to be mad at you for saying that?
No, I don't want anyone, who has 0DT product that really loves it. I think it's a great product. I do. I just can't do it. That's all I'm saying. I'm not saying anything negative about the product. I just can't personally do it. Yeah. So I think it's a great product for the retail folks. It gives them some good benefits, but not for me. So anyway, what else? Would we miss anything, guys? Bum before we head out.
I'm sensing a theme, and it's something along the lines of risk management. Yeah, and everyone wants to get healthy and drink less and run more and whatever in their personal life. Everyone in their trading life just needs to focus on risk management.
Yeah, I think that's fair. And I think, you need to know where you're exiting the trade you're about to do before you get into it. Okay, now if it's the same exit strategy, meaning I'm getting out at, and we should probably talk about this before we go. I'm getting out at 50% max profit of what the max profit is, and I'm going to peel out at whatever on the other side, 50% of the loss of what I have in it. Okay, I don't care what it is, but you got to have something, right? Now, when you guys sell a $5 call spread, I'm making this up, for $2. Okay, let's say you're in for $2. Are you trying to get all $2 out of it? Do you have like 80% of $2 is your number, 50% of $2, 30? Is there some number? And is it based on how much time's left till that thing expires as well? Is it a combination of both? Where if it goes to 50% in a day, you're getting out. If it goes to 80% over, a couple of weeks, that's when you get out. Any thoughts on that?
I mean, I do have thoughts. For me, and maybe this is a risk management thing for me, I like to get out of trades for the same reasons that I go into them, which is, like if I go in, I have Volland. That's my platform.
Sure.
I go into trades with Volland reasons in mind. If I'm getting out, I'd like to get out with Volland reasons in mind. And that's part of the whole risk management thing is I don't want to be thinking about the money. I want to be thinking about my thesis. Okay. And when the thesis changes, then I'm out. But if the thesis doesn't change, then I don't want to get out no matter what the P&L is on the trade.
Okay. Fair. Love it. Mark, any thoughts there?
Nope. I think that thesis-oriented approach is exactly right. Like, and I think that thesis can be something changed or like a price is met or a target, but stick to the plan, stick to your risk management. You
will get out though, just so we're clear on the thesis part. You sell the $2 spread and you've got 2 weeks to go and it's trading at a nickel. Maybe you get out of that one, or
always
maybe
pay your lunch money. Yes, always pay your lunch money. That's my thing. If you only have $5, 5 cents left in the thing, pay your lunch money and get out.
Well, if it's a day, maybe you don't, but if it's 2 weeks, you probably might. I might even take up the short for 5 cents and leave the long just in case. Take my lotto ticket. I don't know.
That's
Mark
good.
Doesn't like. I can tell Mark.
Your trade is completely different. Then you're risking $1.95 to make a nickel, and it's like, when does that make sense?
Yeah. That doesn't make sense. That doesn't make sense. All right, cool. I'm trying to think if we missed anything, glaring, especially for the retail side of this equation, right? Anything? I don't think so. Pretty good. So you're right. It does sound like it boils down to that risk management bucket. And I'm assuming that just kind of broadly equates to discipline and take emotion out of the equation, right? Which is very, very critical, very critical. Yeah. So, all right, boys, good to see you. Happy New Year. I hope 2026 is a banger, and we all make millions. Why would he say millions when you can say billions?
Because we're starting out with $20.
Well, by the way, Mark and I are going to do a show. You're welcome to tag along with this in the near future when pattern day trading changes. It's happening, boys. Mark, would you agree with that?
Your New Year's resolution.
I hope so. I don't know exactly when, but
me neither.
Or do.
I'm going to find out. I'm going to stack in a couple of weeks in Chicago, which is the Securities Traders Association, which is a kind of a political committee sort of thing. Not politically, but they deal with FINRA and SEC a lot and all the rules and regulations that are going on out there. We're going to get some more details in a couple of weeks, but I think we know it's happening. We just don't know when and to what degree. So stay tuned for that. All right. Good to see you again. Have a great rest of the week. I can't say that. Mark's line. Go, Mark.
Happy trading.
All right, everyone. See you next week.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.